they're not going to do it out of benevolence or some underlying belief in the technology. They're going to do it because you help them earn a bonus at the end of the year. And so you better make sure it's a damn good bonus for them.
DeFi has just grown its resilience as a whole, as a category. What kind of advice do you have for founders who are in a situation like that, or perhaps are headed for one and don't yet realize it?
You know, the idea that Ethereum would just sell itself, I think, is mistaken. And you actually have to have, I think Solana's done a much better job of this than Ethereum.
Welcome back to the Rollup. We are your hosts. I'm Andy.
I'm Robbie, and this is your home to learn from the biggest guests, the brightest minds at the tip of innovation.
Our goal is to help spread the collective knowledge of everyone in our community.
We are breaking crypto out of its echo chamber and taking it to the real world.
Sit back, relax, and enjoy a quick word from some of our awesome partners who make this show possible.
Crypto UX? Broken. AI? Can't trust it. Let Magic Newton set you free. It puts your on-chain transactions on autopilot. Does all the work for you 24/7 so you can go do what you want. The vision of Magic Labs. The creators of embedded wallets, used and backed by the best. See for yourself. Simpler crypto UX, verifiable AI agents. Newton.xyz.
Introducing Asset Runes, the future of decentralized finance. Stablecoins natively on Bitcoin. Hedge against volatility. Diversify your portfolio. All directly from your Bitcoin wallet. Secured by ZK technology. This is Asset Runes. Available now, exclusively on Starknet. I probably spoke to Sid for the first time when I was like 21 in like 2020 or something, or 21. You know, so a lot has changed since then. We got him up here now. Sid, good to see you again, man. Congratulations on some of the recent success.
No, thank you. Thank you. I appreciate it. It's been, yes, I think we've had pretty good momentum so far this year, but I don't take it for granted. It's certainly a lot of grinding behind the scenes.
Yeah, man. So look, I gotta tell you that I started this poll 2 weeks ago or so. It was like, how long will the revenue meta last? And I got absolutely blasted on Twitter for it. You know, but the options that I put were less than 3 months, less than 6 months, less than a year, less than 2 years. I think I should have put more than 2 years.
Yeah.
But a lot of people did like less than 3 months or less than 2 years, which assumedly is like more, like it's gonna last forever. I do feel like you guys have been building for this moment of people actually caring about, let's just say, revenue, economics, and such more so than others. I'm just curious, like, what's the state of things with regards to your view of how the market is assessing different DeFi protocols based on different on-chain metrics, and kind of like how you're viewing it from the founder's perspective or the builder's perspective, as far as like what the North Star is, or one or two things to really kind of focus on in terms of metrics?
It's a good question. I'd say it's kind of, my view on it has shifted over the last 12 months. If you'd asked me, Andy, 12 months ago, what I was focused on, I would have said it was 90% TVL and then maybe 10% or less revenue. Like we certainly paid attention to it because that's what pays to keep the lights on. But I would have said that, you know, us internally and then also the VCs and the funds and everybody who holds our token, what they cared about more was TVL. And now I would say it's kind of shifted. I don't know if it's hit 50-50 yet, but nowadays, anytime I talk to a fund, whether it's a liquid fund kind of looking at the token, one of our existing venture backers, or just the community, what comes up more and more is the revenue side of things. So I'd say it's maybe not quite 50-50, but we've gone from 90-10 to maybe like 60-40, getting close to 50-50. And I think across the board, the other thing that we hear as well is every liquid fund we're talking to is kind of trying to identify revenue producing teams and protocols and focusing on that rather than TVL, because unfortunately we've seen that in a lot of cases you have this massive explosion of TVL that then quickly evaporates once a team or a protocol launches their token. So it's not sticky, it's not a durable business. And that's what they're using revenue as a proxy for now.
Okay. And I've been kind of using the mental model for these funds and for these investors who are now really trying to get a bit more exposure to these types of assets as look, I mean, it was the new administration in the States
Yeah.
came in and really just kind of catapulted people out of this mindset that I almost kind of
Yeah.
I don't blame 𝗯𝗲𝗀𝗃𝗃's Medium blogs back in the day, but like he really kind of started this like this is a useless governance token, do not
Yeah.
buy,
Yeah.
like
Yeah.
you know what
Yeah.
I mean, right? And so
Which
that
would have been
happened.
straight out of the memo from his lawyer, right? Is like you have to tell everybody that's worthless so that you don't get sued.
Exactly, right? And that was the state of affairs, which looking back on it was so silly. So that happened,
Mhm.
and then the other kind of thing that I'm pointing to is obviously just like the success of Hyperliquid, the model
Yeah.
there, the token, et cetera. So that just changed the way that the market has thought about tokens
Mhm.
and DeFi in general. And it seems like that's also coming at a time where there's also kind of the power law hitting the market in a stronger way than ever as far as the dispersion of different assets in the altcoin market broadly.
Yeah, I think so. And you have I think a couple of things kind of contributed to it and to kind of the rise of the let's call it the revenue meta. But you had a lot of L1s and L2s that were valued at 2 to 3 billion last year or in private rounds in 2023 and 2022, and a lot of those are now valued at 2 to 300 million FDV because they never landed they never landed users or activity on their chains. And so meanwhile, you've seen the interest flip to now where you want to own the kind of the app because that's where the customer relationship is, which is where you can kind of charge revenue. And you've seen, I think, where we've tried to position ourselves is we think that DeFi protocols are going to outperform memes this year because I similarly to you, I think memes were an equal and opposite reaction to if you do a DeFi protocol, you get sued into oblivion. And so a lot of people then did useless, valueless meme coin tokens. But in a world where you can build real protocols that have real revenue and real businesses that are sustainable, I think there's going to be less oxygen for meme coins. And so I think we are trying to position ourselves to stand out by being a DeFi protocol that has revenues. The only way I know how to do a business for 20 years that'll have it survive is if you can generate revenues to pay for everything for the 20 years. Otherwise, you're effectively just on a melting ice cube. And so we value independence and being in control of our own destiny. So we want to continue to generate revenues. And I think there's maybe going to be half a dozen DeFi protocols that can do that, and so we want to be part of that pack. And so I think that's how we are trying to stand out, and I think that's going to be the play for this year for teams who are successful.
Yeah, yeah, I agree. I mean, I think that's going to keep happening. I don't discount that there will be select memes that do well. I mean, there always
Of
will
course,
be,
yeah.
but I think this dispersion is going to hit harder on some of these L1, L2 tokens,
Mhm.
some of these kind of like different infrastructure style plays, which are seemingly just trying to figure it out as well. Because I think a lot of them have to figure out how to almost like dog food their own technology and then build applications on top of what they already
Mhm.
have that like attract some sort of users. So
Yeah.
shifting gears here, more in towards like the nitty gritty of DeFi. Um, so you've kind of prioritized Maple around stablecoin growth, private credit market taking share away from banks in general, asset
Mhm.
management shifting on chain as well. Um, I'm curious, like at the kind of like intersection of all three of these, you must be working with different teams and protocols that are specialized or do well in enabling you to do this. Who are the most important parts to the Maple Finance success story? Whether it be infrastructure providers, yield partners, et cetera. And kind of how have these partners really helped you succeed?
It's a really good question. It's a very broad question. I'll do my best to kind of answer it succinctly. So I think where we've seen the most growth this year has been on Syrup USD. And a lot of that success has been due to our DeFi partnerships. So I would attribute a lot of the success and the kind of the value in partnerships there to, we got Syrup USDC onboarded as collateral to Morpho and Euler. So those were really important partnerships. Our first major DeFi partnership there was Pendle. So they helped with hedging and also speculation on the interest rates. And then more recently, we've had a really large partnership with Spark and the 𝗪 ecosystem. And we want to continue growing that. We view them almost as the central bank of the DeFi space. And then recently, about 2-3 weeks ago, we launched on Solana, and that's the big partnership there has been Kamino. So Syrup USDC is in the lending market there, and has been able to be looped. So there's a number of partners, but I think those DeFi partnerships have probably been the biggest driver of our growth over the last 9 months. And then in terms of infrastructure, we are not only DeFi, we actually have a lot of CeFi partners. And I think that's one of our unique differentiators is we can accept collateral in a qualified custodian. So we do a lot of work with Anchorage, with BitGo, Copper. So I think that custodial infrastructure has been really important for us in serving, serving institutional borrowers. So they post us Bitcoin or Sol or ETH or XRP, and we send them loans on chain. But we couldn't do that if we didn't have these custodial partners.
Innovating finance, global, institutional, and on-chain. Deep liquidity to drive capital efficiency. Now maximize yield on institutional-grade liquid staking with 𝗵𝗶. Unlock $1 trillion of capital via 𝗵𝗶𝗃𝗃. All of this secured by Mantle's treasury of billions in stables and ETH capital pools. This entire ecosystem is coordinated by a vast network of seasoned VCs that are aiming to create the next generation of banking and financial technology. This is Mantle.
Introducing SummerFi, one of DeFi's oldest and most battle-tested platforms. SummerFi automates your exposure to DeFi's highest quality yield so you can sit back and enjoy this summer. Deposit stablecoins at USDC or USDT and let SummerFi route your funds into optimized, low-risk lending strategies. With over 100 million in instant liquidity and support for over 34 protocols across Ethereum, Arbitrum, and more, you always stay in control. Choose from a wide range of curated strategies reviewed by independent risk experts, all in just a few clicks. So why work hard for your yield when you can be lazy? Start earning now at summer.fi, the home of the lazy summer protocol.
That's the part of the business that I recall more so than ever previously from 21 and 22. But I think this expansion into stablecoins and also just into more, into more markets that anybody can participate in has really served you guys well. Obviously, there's been this kind of like power cohort of DeFi protocols as well that have really emerged. Given the ones that you've named as well as on the CeFi side. One info question that I have. Yeah. Go ahead.
I was going to say, and I think one of the interesting trends we've seen is that some of the DeFi protocols who have done really well lately have kind of had this almost hybrid CeFi DeFi approach where there are aspects that are quite centralized and then there are aspects that are fully on chain. I think Hyperliquid and Athena are two of the other ones that really come to mind in a strong way.
Yeah. Definitely. I mean, the puck is going there, right? So I mean, teams that are skating towards RWA's institutions, it's very clear. And I mean, the news the last 3 months, looking back, to where we were, has been it's been shocking in the best way possible. Okay, so one thesis that I have is around opinionated applications, right? So there is a world where application reaches enough product market fit on a given shared state, on a given chain, like Ethereum, like Solana, and you have enough of a sticky user base to actually go and basically create your own chain or your own app chain, etc.
Yeah.
You have the application being the core piece of it, the chain like the like the bottom of the funnel, and you basically build this thing out as a uni chain, as a as a Maple chain. Will Maple ever launch a chain, or is that just not something that you're thinking about?
It's a good question. I would not launch a chain for the sake of launching a chain. I think we would launch one if we found that it was the answer to a big problem for us. Right now, the main things in front of us, we're trying to keep the blinders on this year, and so our goals are deploy more cash into loans. So we've been growing exceptionally fast, and that means that we build up cash that we are trying to deploy and make sure we stay, as close to fully utilized as possible. And then has been to get Syrup USDC cross chain, and then also grow the TVL through growth of the Bitcoin yield product. But I think to do an app chain, we would have to see that there's very low friction in bringing in new deposits, and also that it doesn't upset our borrowers who are used to taking down funds from us on, at the moment, Ethereum, but maybe another chain in future. So I don't need the same speed advantage that a Hyperliquid or that a DYDX needs. Like we're not a high frequency protocol, so I have less of an impetus to go and start an app chain to reduce cost and improve speed. The people who come to us for loans, they get one, maybe every week or every few weeks. It's not a high frequency type operation, and so that that kind of protects us on that front.
Yep. Yeah. Good point. Yeah, I think more around like sovereignty of excessive gas fees or things of this nature. But if people are moving large sums of capital, I think what probably matters to a lot of your users is more about censorship resistance and these types of properties.
Yeah, exactly. And the other point I'd add is where we've had some interest before has been the idea that we could have synthetic assets that represent your assets in custody. Like if you post $100 million of Bitcoin to Anchorage, that we could give you like a synthetic receipt for that, so that everyone can track it for transparency. That's kind of been that's so far been the biggest plus that we've looked at for an app chain. But otherwise, we don't feel tremendous pressure. We just want to focus on kind of growing the core business.
Yeah. Yeah. One more question. When you're looking at the landscape of being a founder, right? You're looking at going through the last bear market, hunkering down, gritting through that. What kind of advice do you have for other founders who have gone through, long bear markets, have gone through, uncomfortable situations on chain, who have, had to persevere in the way that Syrup has, in the way that Euler has, in the way that a lot of DeFi has just grown its resilience as a whole, as a category? What kind of advice do you have for founders who, are in a situation like that, or perhaps are headed for one and don't yet realize it? Because it just kind of jumps out at you. I tell you that.
Yeah. It never happens when you expect it.
I'll tell you that.
I'd kind of put three points, or three key kind of points. Some of them are tactical, some of them are philosophical. So on the tactical point, I think when you're going through a crisis, take all the medicine you can up front. So we had to do layoffs, and then everyone who stayed had to do salary reductions post FTX, but we did it up front. We didn't do paper cuts where you do one round of cuts and then you wait a couple of months and you do another. We took all the medicine and ripped off the Band-Aid up front. And I think that was important, one, to give people certainty that there wasn't going to be another round. Two, just transparency, and we got it out of the way quickly, so there wasn't any lingering dread. But it also gave us the most optionality because we started saving. We saved the most money rather than trying to hope and pray that things would get better. So take your negative, take your medicine up front. The second thing I'd say is, focus on what you can control and keep everyone on the team aligned to a North Star. It was really important to keep morale up and, and know that we were still building towards something much bigger. And then the third point I would say is, there's exactly zero great businesses out there that have not gone through a period of major setback, right? Like you look at Amazon, their stock cratered 97% after the dot-com crash. You look at Facebook, they had this crisis point with the shift to mobile. You look at how many near-death experiences has Tesla had? Same with SpaceX. So there's exactly zero great businesses that have not gone through one of these moments. So I would just say almost expect that it's going to have to happen to you. And your key is, most businesses are not incredibly successful in the first 5 years. So you actually have to plan to be doing this for 10, 20, 30 plus years. Like look at Jensen Huang from NVIDIA, right? He's one of the longest serving CEOs in the market. Most of their success has been in the last 10 years, right? He wasn't benchmarking himself against everyone else at year 6. And so I think that's the way to operate, do it for the long term.
Man, I think taking the pain early is something that I've learned in life that it's hard to do. Goes for everything. Goes for relationships, for just kind of cutting losses, for because you get caught in like this like sunk cost theory or sunk
Yeah,
cost bias,
100%.
right? Where it's like, oh man, I can't cut this because just but it's like no, like man, even just saving 1%, 10% is better than losing,
Yeah. Yeah.
99.9%. You know what I mean?
Sometimes you can't finish the day with a win, but you just have to not suffer an L during the day. And
Yeah.
so but you just accumulate those over time. You get up and you keep grinding through every day.
And Sid, one last thing for you as well on the advice side for working with expanding out of crypto natives and into institutional, basically capital and that kind of world. What kind of advice do you have for founders who are also looking to break into that world more with their protocol? When it goes to communicating with these more traditional financial firms, when it goes to kind of understanding what they want and need, maybe you could just provide a bit of insight as to what you found, like relationship wise, strategy wise, and really what these institutions want, and then how you're going about providing it for them.
Yeah, it's a good question. And it's one that a lot of people are dealing with. Like as we're seeing more interest from institutional and traditional Wall Street players in what's going on in DeFi and crypto, you're going to have to navigate it more. So I think expect it to take a while. We recently had the announcement of closing a deal with Cantor, but that was months of work and a lot of negotiation and kind of prep behind the scenes.
Congrats.
Expect it to take a long time. Also, in terms of selling, I think a lot of people focus too much on expounding on the virtues of their tech, and the tech doesn't sell itself. Instead, what you have to do is show how whatever you're producing aligns with their self-interest. So in our case, if we're borrowing from someone, we're paying interest, and so we're generating revenue for them, and we're showing how the relationship can scale. And so I think really emphasizing how the relationship can scale, because for a lot of these businesses, they're very large and there's an imbalance where most of the crypto teams trying to work with them are going to be startups or pretty close to startups. And so you have to sell them on investing in the future scalability of the relationship and tying it back to their self-interest. They're not going to do it out of benevolence or some underlying belief in the technology. They're going to do it because you help them earn a bonus at the end of the year. And so you better make sure it's a damn good bonus for them. And that's going to come from you being able to show this is going to be a large relationship in future or show that's going to generate them some revenue.
Yeah. Yeah, man. They want to see first of all, tech wise, I think a lot of us over indexed on, how much of the tech these institutions would care about. In fact, I think a lot of us over indexed on how much Ethereum would win these relationships versus the other chains. Like I was quite shocked, frankly, to see BlackRock's 𝗵𝗆 go to Avalanche and Solana so fast. Like I just remember thinking back in the day, like, oh wow, it's just Ethereum because like no. They want to expand where anybody is, and they also will likely want some sort of like permissioned chains as well. That's like on the tech. Yeah.
It's Peter Thiel's point, right? Like the product doesn't actually sell itself. You have to have you have to invest in sales. And even if you look at somebody like Elon Musk, he always talks about how he doesn't have marketing team. Well, that's because he is, one of the best marketers in the world, right? And so, the idea that Ethereum would just sell itself, I think is mistaken. And you actually have to have, I think Solana's done a much better job of this than Ethereum. And Ethereum's kind of recognized, I think the Ethereum Foundation is recognizing that now, but you actually have to be selling the product and you have to have dedicated sales teams. It doesn't just go and sell itself.
Well, Sid, man, I hope you guys hit that goal of $4 billion AUM by the end of the year. And I hope you double your monthly revenue. And I hope that token keeps going up, man.
Thanks, Andy.
Thanks for coming on, and appreciate your time. And hopefully see you next week in the city, man. I'll be around.
Yeah, would love that. Thanks for having me on, Andy. Cheers.
Cheers, man. Speak soon. Peace.